Good morning. My name is Vladimir Tikhomirov. I'm chief economist at BCS Global Markets, and I'll give you my view on the macro developments for the coming week. The past week has been very volatile and very full of events, mostly driven by US electoral cycle. Over the weekend, we have seen that Biden has declared a victory. Trump has refused to acknowledge that. Looks like that we're in for a period of more political wrestling in the US, but generally it looks like that Biden is going to be the next US president. And at the same time, it is very possible that the Congress will remain split between Republicans and Democrats. Democrats are likely to keep control over the lower house, while Republicans are likely to keep the control over the Senate. We'll know final results of that only in January, when there will be two runoffs for the Senate. But generally, that's the position as it looks like today. Overall, that seems to be one of the best probable results of the US election outcome for the markets, because what that means is that while Biden victory gives a bit more certainty in terms of US relations with the main trade partners and the world in general, people expect that there will be less confrontation and more cooperation, particularly between US and its major allies, including Europe, than it was under Trump. On the other hand, a divided Congress means that the possibility for Biden to push forward some of his radical proposals in the tax area, or to revert some of significant innovations that Trump pushed through, including the support for local businesses in the US, etc., are likely to be limited. So Biden is not likely to get a lot of progress in this area, which seems to be a good outlook for the markets. For Russia, the Biden victory on the surface does not spell a lot of good news. Biden is known to be a very strong supporter of more pressure, political pressure on Russia, including sanctions. That's on one hand, but on the other hand, he was on record many times saying that he would like to have a more to reestablish control over their arms globally with Russia, and he would like to improve U.S. relations with the allies in Europe, which means that on one hand, Biden is not likely to release any pressure on Russia, but on the other hand, I think his possibilities to increase pressure and to put more sanctions against Russia could be limited, because basically on balance he would like also to reach some progress with Russia in the defense area and to have more close cooperation with Europeans, which is not really possible if US is going to put a lot of pressure on Russia, particularly in the energy area. So it looks like that the overall the Biden victory might be actually neutral news for Russia rather than a negative news that some people say. Which means that the Russian market and the ruble in the coming weeks are likely to follow the global trend, which could be actually positive. As I mentioned, that the markets are cheering a Biden victory and cheering the split Congress in the US, which could lead to more risk-on attitude. We have seen that already the past week, when ruble has posted a quite significant, more than 5% increase against the US dollar. So this trend actually could continue along with the global markets. Although I don't think that we are likely to see any positive news coming from the US for Russia. But the negative news could be balanced off by some rapprochement in the strategic area. Perhaps one other news that I would like to mention here is the local news from Russia. On Friday, Росстат has published its estimate for the inflation for October, which totally corresponded to my forecast, 4% year-on-year inflation. Quite significant rise in the last 6 months. Inflation actually have grown in Russia from roughly 2.5% to 4% in October, and moreover, the rise in inflation is likely to continue in the coming months. I actually expect inflation to be around 4.2% by the year end. What that means is that for the Central Bank of Russia, there is basically no room left for any monetary easing, given the fact that the current rate is 4.25 and inflation is likely to be around 4.2% within next month or so. And that actually confirms my forecast that the central bank key rate is likely to remain unchanged throughout the remainder of this year, as well as at least during the first half of next year. I think that's all on my side. Thank you.